So the first one is equipment repair and maintenance costs as a percent of revenue. So this is super simple. Once you've determined your equipment repair and maintenance costs, you just divide them by the total revenue. We do have metric definitions, and when you look at that, when you go in to start your survey, there's a place that says metric definitions, and you'll get a really good definition for the equipment repair and maintenance costs, for example, and a lot of these other things that you're working through. So we did try to make it as easy as we can so that you can go in and look at it, and you can review it and make sure that what you're reporting meets the definitions. The next one is one of my favorites because it really helped me zero in on some things that I was really kind of fighting with. And it's very similar to the above metric, but instead of dividing using your total revenue, you're using your throughput. And throughput is defined as revenue minus subcontract costs and materials costs. And the reason I'm saying that this was sort of a light bulb to me is because the company I used to work for, the bridge builder, our revenue could be all over the place, sort of depending on what we decided to subcontract out. And our results were quite a bit different if you looked at it from a revenue standpoint, or if you looked at it if we took out the subcontracting component. So I think this will be a really good metric for you guys to look at and to measure and to compare yourself. It does offer like easier comparisons because you're basically just evening everything out when you look at throughput, which is revenue minus subcontract costs minus materials costs. Then the next one is the equipment repair and maintenance costs as a percent of construction equipment replacement value. So this is trying to give you basically how much money are you spending as it relates to what is the replacement value of the equipment. I always look at, should we decide to repair or should we decide to replace? And this really helps you look at, you want a healthy balance here. You don't want to be spending way too much money as it relates to the estimated replacement value, and just knowing that you have a really good balance there. Again, you're using the same thing that you've already calculated, the equipment repair and maintenance costs, and then you will need to try to determine what is the estimated replacement value. The next one here is the equipment repair and maintenance labor. So these two are really looking at the labor that you spent. So you divide the equipment repair and maintenance labor by your total construction revenue. So this is just a way of zeroing in on the labor component. Again, you've already determined the repair and maintenance cost. You just take the labor component of that, and then you have your revenue figure also. And so these are really easy things for financial people to gather. And if you're on the equipment management side, this is a really good and easy ask of your financial people. So please don't hesitate. In fact, we encourage working together, the equipment people and the finance people and the operations people. The more you can get to work together, the better. Number 13 is equipment repair and maintenance labor as a percentage of equipment repair and maintenance costs. So again, you've already determined your equipment repair and maintenance costs, and this is just showing you how much of that is labor. That's something that a lot of people really look at. You'll need to determine, do you have the right number of technicians? If you're outsourcing a lot of your repair, also look at that. What is the labor component? Then this is also one of my personal favorites, and that's why I have highlighted it in red, and we affectionately call this RONA. So basically, it stands for Return on Net Assets. So you'll divide your net income before taxes by your net working capital plus your net book value of the fixed assets. This again is something that really comes right off of your financials. It's an easy one to get, and it's basically going to show you what is your return on your net assets. And I know there are a lot of places that people can put money. You want to know what is your return on the net assets. And of course, in the heavy construction world, it's going to be higher. you're going to have a lot more assets that you're really going to be looking at. So having this heavy equipment comparator to be able to compare yours to other people that are in construction, in heavy construction, doing work similar to yours is very important. I had a surety company once say, hey, you're way out of line here. And I was able to bring up and support actually our position in that we were in heavy construction and hey, we're going to have a lot more assets. So I think this is one where the comparator can really give you a lot of helpful information.